Yo, yo, yo. CPA Strength here, back with another video. This is Accounting for Beginners 134. This is my classic series, helped thousands of people. We have the whole collection over here. This is a complete playlist so far, and I'll probably have more later. So if you're needing basic accounting help has 100 and some odd videos at this moment. So check it out. This would be why DCAler. This is why really my claim to fame. I'm not saying I'm famous, but this is why you would watch me. DCAler, debit, credit, asset, draw, expense, liability, equity, revenue. If they are going, if an asset, draw, expense is going up in value, it would be debited. If an asset, draw, expense is going down in value, you would credit it. If liability, equity, revenue is going up in value, you credit it. If a liability, equity, or revenue is going down in value, you debit it. So it's like a mirror image to the other side. Anyways, we're doing wages payable today. Wages payable. Let's just go through with a normal work week. You Monday through Friday. Monday through Friday is a normal work week, and you pay your employees $100 a day. Or let's say you have one employee, you pay them $100 a day. Let's keep it simple. So normal would be, let's do the cash, because you always have cash. Normal, you pay somebody $500 because Monday, Tuesday, Wednesday, Thursday, Friday, you pay them all week. So you're gonna have an outlay of $500 cash. So cash would be leaving your business. As we know from many videos before, cash is an asset. If an asset's leaving your business, here's an asset, which cash is, but it's not increasing in value, it's going to be decreasing in value because it's leaving the business, it's going to credit. So there, a normal week, you have cash outgoing of $500, that's going to be your credit. And see, credit, these are 3 different journal entries. On journal entries, you stagger to the right, the credit. We have wages expense, which would be our debit, because we got to think, what is our outlay of cash here? Like, why did we have that for wages expense, salaries expense, interchangeable? That's why we have our outlay of cash here of $500. So that's gonna be our debit. Debit $500, wages expense, credit cash $500. And because we know that debits equal credits, and that was our wages expense $500. All right, now we come to this main thing is wages payable on 134 here, on Accounting for Beginners 134, wages payable. So here we have our wages payable at 12/31. Now, because that's the end of our reporting period, we need to make our balance sheet, our income statement, and we want to have an accurate representation of the business at that day at 12/31, the end of the year. Now look, we got our chart here. 12/31 happens to be on a Wednesday. People don't get paid our employees don't get paid till Friday, but they worked. 12/31 is when we have to report. So this is gonna be an adjusting entry here. This first one, because there's no we got to adjust, because we're gonna adjust to make an accurate representation of the business at this certain date. Monday, Tuesday, and Wednesday, our employees worked. We didn't pay them yet because it's not payday. But they did work, so there is going to be a wages expense for those 3 days. So you're going to have the wages expense is going to be, for 3 days, $300. Now, you didn't pay them cash. See up here, normal one, you'd pay them cash. We didn't pay our employees cash yet because it's not payday yet, but we owe them. If you owe somebody something, it's a liability. And what do we owe? Well, we owe wages. So it's going to be wages payable. And then you say, you know, if you owe somebody something, it's a wages payable, and that's a liability. So you can go over here to our GC Adler and say a liability is a wages payable. Is it going up in value? Yes, it is. If a liability is going up in value, it's going to be credited. And there's our wages payable for $300. Because we want to have an accurate representation of the business at this time. We actually didn't give our employees any money, but we owe it to them at this date. Because they worked 3 days. They worked 3 days for us, so that's a wages expense. Now we're going to come into 1-2 now. So it's going to, you know, it's going to be a new period. So our employees are going to get paid on this Friday at 1-2. So let's put how much are they going to get paid? Well, they worked all week. So they're going to get a cash of $500. We already went over why cash would be credited if you're paying out. We can go over it again here. Cash is an asset, and it's going to be leaving the business, because now we're paying. This is Friday payday, so we have $500 cash leaving the business. If cash is an asset, if an asset is going up, you debit it. If it's decreasing, going down, you credit it. So we credit cash for $500. We already accounted for our wages expense for the first 3 days here, Monday, Tuesday, Wednesday, and our 12/31 adjusting entry. So we have, for our wages expense, we have two more days. So out of that $500, so we've already done 3 days. Now we have 2 more days. 1-2. So we're going to do wages expense $200. An expense of expenses increasing, we debit it. So now we have the wages payable here for our $300 wages payable, because we've paid our employees $500. So why do we have the outlay cash for $500? Well, a normal would be wages expense for $500, but for this week of work, we already have a wages expense of $300. So now we need to have the wages expense for $200 to make for a week's worth of work, a $500 wages expense. So that's what we have here. And then, so what's the other $300? We had the wages that we owed them for wages payable. We paid them now. So we already took the expense over here, but now we're actually giving them the cash. So that would be the wages payable. We don't owe them the wages payable anymore, because we're paying them. So if we paid them $500, we don't owe them anymore. So the wages payable is going to go down in value. So we have, if our wages payable is going down, our wages payable is liability. Liability. If it's going up in value, we credit. If it's going down in value, we debit it. So we have our wages payable debited for $300 over here. And basically, because it's a liability, wages payable is a liability account. This would be on our general journal on 12/31. You have $300, and at 1/2 you'd have negative $300, and it would go down to 0. So we'd have 0 in our wages payable account. Anyways, I hope you liked this video. Please comment, share, subscribe, like the video. If you have any questions, that you'd want me to include in a future video, please drop it down below. And Y'all have a great day. I hope you learned something. And until next time, deuces.